Hey guys, Brenna here with the Mortgage Shop, the CEO and co-founder of the Mortgage Shop. I wanted to come to you guys in the new year. Happy New Year, by the way. We are about to get into tax filing season. And so I just wanted to talk to you guys a little bit about that and how people should wisely file their short-term rental income or long-term rental income. I do want to preface by saying I'm not a CPA, but I have been trained by a CPA and I see this every day. So I know what works and what doesn't work for you guys. And it could make or break you trying to get more rental properties within the coming year, depending upon how you file your rental income. And so you guys need to get a CPA. First of all, let's hire a CPA that knows what they're doing, that has experience in filing rental income for you. You do not need to do something like TurboTax or try to get your friend to do your taxes unless they are a licensed and an established CPA. Please don't do TurboTax because you will probably not reap the rewards or the benefits that you can get, and you may end up paying more taxes than you need to. So I'm going to share my screen and I'm going to share the Schedule E with you. A Schedule E is what you file your rental income on, or what you should file your rental income on if you are filing it under your personal tax returns. I will get to LLCs in separate tax returns in a second, but let's just go over what you should file on your personal tax return. Let's see. Share. And I'm pulling this up. Okay, so this is a Schedule E supplemental income and loss statement that goes on your personal tax return. You will see your properties listed here under A, B, C. If you have more than 3 properties, then you'll just get a second sheet of the Schedule E. If you don't, it'll just show 3 properties here. Your second Schedule E page is for, again, if you have any other properties, or it will say any income or loss from separate businesses. So you don't really need to worry about that right now. You just need to worry about the rental income part of the Schedule E. A lot of people don't know what schedule means. It's on your personal tax return that you file. So if you're married, you file jointly, or you're just single, you file separately, or married filing separately, you have your personal tax return, or known as your 1040. The Schedule E is on that personal tax return, or 1040. So here we show that it is the Schedule E. You show the year of the tax return, and then you show your properties again. And so it'll list out A, B, C. Your tax accountant will do A, B, C. This goes with each property, if that makes sense. Definitely talk to your CPA about this section, the fair rental days. If it does not show anything, it is just blank, lenders have to assume that it was for 365 days or 366 days if it is a leap year. So if it was not rented out the full year, you definitely want to make sure your CPA is aware of that. If you just purchased it in September of 2021 and he puts 365 days, he or she, then that's going to show that you made a lot less income than you really did. So you want to be open and candid about how many days you actually rented it and how many you did not. And then you'll see the second where it says personal use days. If you had it the full year, and let's say you did stay, 14 days out of the year, then you would see that this shows 365 minus those 14 days. And then you would just show 14 days here. That was your personal use days. And then you will show down here, rents received. It will show you the full amount that you received for the time period that it states. So again, this is blank. So what do I have to assume? I have to assume that it was for the full year, 365 or 366 days. So you show your rents received. You can claim mortgage interest. You will show your taxes, your insurance, your depreciation. 19 other, and you see that says C attached. You can claim things like fees, startup costs, HOA fees, and then something called amortization or a casualty loss. In my years of doing this, I have never seen something saying casualty loss, but there is such things as amortization and HOA fees. This actually, it sounds like it would take it against you, but we can add this back in to your total net income. So we always want to see attached statement if there is something there to claim other than what is being claimed on these other lines. And you will just want to make sure when you do send the tax return to your loan originator and you do have that statement that is attached, so it'll say statement 1 or statement A or statement 2 if you have multiple statements. You want to make sure you send the full tax return with those statements attached. And usually when your CPA sends you a copy, it will have all of that on there. So you just want to save one for your personal records. But either way, this is where we get your net rental income from when we calculate your rental income from properties that you already own. Now, if you're purchasing an investment and you want to use the proposed rental income on that subject property, obviously that's totally different. It wouldn't show up on your tax return, but keep in mind when you close that property, okay, let's say you buy it, in March of 2022, and you use that proposed rental income, great. It's really offsetting that mortgage payment, so your debt to income is really not affected. Once you close on that and it's a short-term rental, you cannot show that proposed rental income on anything until you file that 2022 tax return. So just keep that in mind. A lot of people will try to purchase an investment property first and then a second home. That's why you want to work with a lender that knows what they're doing in this field to coach you of which one you should probably buy first if you want to maximize your debt to income threshold for that year. So that's all I have to say about the Schedule E. Now, some people will hold an LLC. I'll stop sharing so I can talk to you a little bit more personally. Some people will have an LLC business, like a partnership or an S Corp, and those are actually separate tax returns filed than your personal tax return. So a lot of people are like, I don't know what the difference is. My CPA does it. And so I always ask, okay, cool. Do you file 1, 2, or more tax returns a year? So 1 or 2 or more tax returns. And if they say, oh, I filed 2, I have, an LLC with a friend. Okay, cool. So I will take that as it's probably a partnership tax return, which means you have that property held in that LLC. However, there is an option where you can do a property in an LLC, but it's just you put the LLC on there, you're the one that personally guaranteed it or what have you, and then it goes on your Schedule E that we just showed and talked about. Some people make this mistake, which I'm trying to tell you guys before you do this with your tax return. Some people will do that partnership that I was telling you about in an LLC, claim that property on that LLC tax return separate from your personal, but then claim income on your personal tax return. So what happens then, once you claim income on your personal tax return, then that is counted as your personal income and not from a self-employed business income. So what the guidelines state that you have to do is if that property is financed that you just claimed on a Schedule E, we have to take that mortgage payment and put it in that rental income calculation to get the net rental income. So that could hurt you because you're claiming things on your Schedule E, but you're also you might be showing a negative income on your K1 from the partnership. A K1 is kind of a different way of how you can pay yourself being self-employed. If that's negative income, we have to count that against you per month. If you have negative rental income on your tax return, your personal, and we have to have that, we will have to count that against you, or the underwriters will count that against you. So if you have a partnership and you have an LLC that is not going to be reported on your personal tax return, do not file that rental income on your personal tax return. You can if you want. My recommendation, just my recommendation, so don't shoot the messenger, but I'm just showing from what experience that I have and showing what I've seen and how it's hurt people. Just do one or the other. If it's going to be on your personal tax return, great, keep it on there. If it's with an LLC and a partnership, keep that income on that partnership. Don't try to have your cake and eat it too, because I promise you, the government, the IRS will not let you do that ever. So with that being said, let me think of any other ways. Some people will do their rental income on a Schedule C. So a Schedule C is on your personal tax return again. It's alphabetized, so it comes before your Schedule E. A Schedule C is a form of being self-employed. It's called a sole proprietorship, but it's still filed on your personal tax return. Schedule C means that you most likely will get a 1099 as opposed to filing a separate business tax return and getting a K-1. It's kind of like a W-2, how you get paid. It's just different forms that you prove of how much you paid yourself in 2021 or whatever year that you're filing for. Some people, I don't know why. I don't know if the CPA was unfamiliar with rental income, or you've done your own and you were unfamiliar with which schedule to put your rental income on. I do not recommend it on a Schedule C, because what happens? That's not a rental income worksheet. So we're counting that mortgage against you in your application. You can't put any rental income under that property because it's not filed on the Schedule E. So we analyze that income as self-employed income. So we do it totally separate. So it's a Schedule C. So let's say it's like 123 LLC on your Schedule C, and it's really the properties that you own, the rental income. Well, we're counting that mortgage against you. And then if you have negative income, we'll be counting that negative income against you as well. So just keep in mind, if it's personal, keep it simple, put it on your Schedule E. Preface with your CPA again, the days that was the fair rental days that it was rented out. And then also, if you are self-employed and you are filing a separate tax return than your personal tax return, please just file it on that tax return and not that tax return and the Schedule E on your personal. I know that can be a little confusing, but just take this video in stride, take it as, an opinion. Maybe take it to your CPA and show them and say, hey, this is my first time filing, or hey, it seemed a little screwy last year. Let's try to fix this and put it just on my Schedule E, or let's take it off my Schedule E because I've refinanced into that LLC business return, whatever it may be. I hope this helps you guys. If you have any questions, feel free to email me at info@mortgageshop.co. So .co, I think it's the cool way instead of .com. Or you can go to our website to schedule a consultation. It's www.mortgageshop.co. So again, mortgageshop.co. And I hope you guys get the properties. We are on the sidelines cheering you on, and I will be here to answer any questions you guys have. Happy New Year, guys.